Good morning. Myself, Dr. Ramawat Ravi, working as a assistant professor in Bingley Government College for Women. Today, now I'm going to talk about the types of editing. Before going to talk on editing, let me know what is meaning of editing. The previous class we discussed it, but anyhow, briefly touching on the editing. Editing is the examination of examination or inspection of various books of accounts by editors. So the editor is a examination or inspection of various accounts books. Let me know what is the accounts. Accounts is a recording of financial transaction in a systematical manner by the accountant. When accountant has recording the transaction, then whatever the transaction recorded by the accountant in a particular form, now at the end of the year they have to prepare, accountant has to prepare the statements like profit and loss account and balance sheet, or different statement, whatever the needable statement. Those statement either genuine or not. So editor has appointed by the director board of company, is an outside person. He has to appointed by the client, and a fine day he will came to the company, and then he has to examine or inspection of the all the all or various accounting records by an editor, followed by a physical checking. He has physically verifying, for example, so one transaction has entered in the accounts book, either the transaction voucher is available or not. I mean, physical verification is done by the accountant, done by the editor. Editor has verifying the stock values. Stock checking also is a one of the basic fundamental checking of inventory to make sure that all the departments are followed, documented, a systematical of recording transaction, whether the all the departments, like example sales department, storage department, godowns, so purchase department, finance department, not once, all together a recording of the transaction in systematical manner or not. That is the main motive of the this thing. And second one, now types of editing. So then editing will the following the based on classification. Number one, based on the ownership, public, organizational structure of an enterprises, the form, the business. Based on time or scope of edit. Third one, based on objective of each type of edit. These are the three basic structure. Now coming to the one by one. First, edit based on ownership. Ownership, we can talk about the owner of the company, owner of the business. Based on the ownership, either sole proprietorship, either partnership, either giant stock company, either Hindu undivided families. These are the different types of based on the ownership is there. Now let me discuss about the first one, editor of sole proprietors concern. It is single management company, single management business. He or she may be whole and soul of the company business transaction. He is a single person, has establishing, starting the business and running by the business. Any things he has to bear it, and he has to operate each and every transaction by the single person. So this type of business we are called a single business or sole proprietor business. he or she maybe is not required by any law or any formalities. Anything is not required because he has the single like kirana stores, like small kirana stores, small supermarket, anything is example of this. So he not need to any legal formalities. So even though a little bit legal formality is there, but such huge legal formalities is not required. And whatever the accounts he has to maintain in a systematical manner because he is the owner and he is the he is not going to fraud because he has to anything fraud he will be victim. So anything whatever the transaction he has entered in a systematical manner is accuracy manner without doing any mistake. If unwantedly happen anything is not think a big problem, but wantedly is not do mistakes. Anything is systematically he has recording the all the transaction in a systematical manner. Accounts are maintained by his staff, mean either his staff or himself also in some cases. There is no errors or fraud. Maximum there is no errors or fraud happen any type in the books of accounts. There is no chance to happen in any errors or fraud. Errors is different and fraud is different. Now coming to the error is a unwantedly is happen, either typical error or something is instead of 1,000 he wrote 10,000. These are the routine activities. That is the unfortunate typographical mistake or any sentence mistake, any figure mistake. It is the unknownly it's happened. That is the errors. And fraud mean is knowingly is happened, intentionally is doing. But such situation is not happen in case of a sole proprietorship because he is the owner. He not need to fraud. He not need to do any errors in the particular business transaction. Any type in the book of accounts, the auditor accounts are generally taken as a correct by the income tax authorities, sales tax authorities, and similar bodies. The auditor accounts are generally taken as a correct by the income tax auditors, authorities, sales tax authorities, and similar bodies. The appointment of the auditor keeps a moral check on the staff of the accounts department. The moral check is a moral ethical check is there. And it is also easy to prepare death duty accounts. Now coming to the but in case of sole proprietorship, auditor role is a minimize because auditor is a formality. Auditor role is a only formalities because sole proprietorship is a maximizing the reducing errors and fraud. So auditor has verify the certificate whatever that done by the sole proprietorship and is easily the auditor job is very easy to verify the records in case of sole proprietorship. It is a one of the best way in the sole proprietorship. Now coming to the partnership. According to the Partnership Act 1932, the what partnership say mean two or more than two people together they are forming a firm, a business firm. That is the business partnership firm. All the partners has their distributing profit or capital, whatever may be that, either equally or based on their ratio. If the ratio is not decided, so they have to share their profit or anything based on their equal proportion. So these are the basic introduction of the partnership firm. Because in the partnership firm, the auditing is a very mandatory and it is a very compulsory also. And each and every aspect we should careful observation in the auditing firm. The disputes among the partners may be avoided because those audit report has working using as a dispute settlement, as a tool for dispute settlements in case of admissions, retirement, or death. So these cases, so the auditor report, based on the auditor report, so they can believe it. Oh, this is the auditor report now. Okay, we can believe it. Without auditing report, when the new partners going to admit in the particular business firm, So whatever the statement in previous, the genuine or not, he or she may be doubt, because when the editor has verifying each and every aspect and he certified that, then they have doesn't any doubts regarding the financial statement in case of both either admission or retirement or death of the partners and adjustment arising on the admissions, the valuation of goodwill and the settlement of accounts. This also is the very important parts in the valuations, will and settlement of the accounts. Audited accounts will be more reliable for the purpose of assessment of the income tax. Audited accounts will be more reliable for the purpose of assessment of the income tax. Negotiations for the loan for from different source of becoming easy. When we are approaching from the banks or any financial institutions, the banks, any financial institution, they have to ask to submit the audited reports. Based on the audited reports, the loans may be sanctioned. So the auditor reports to be submitted by the partnership firm, then the loans or grants or permissions, can be acceptable by the nature of this thing. The auditor can suggest a better way of keeping accounts of the firm. And another way, auditor has given suggestion to the partnership firm to improve their accounting system in a smooth manner. So these are the second one of the types. Now coming to the next one, audit of company. Company is the artificial person. Is created by the law. They're created by the government, either state government or central government or local body. It is artificial person. So human being can created by the God, but company can created by the law. This is the law. Because when the business value will goes to increase, so automatically we are going for the option is the company. So in company, the different areas throughout the globe, the investor has investing money. All the investors, they are living throughout the world. Anybody can invest in the money. Anybody can invest. Either we can call institutional investors or individual investors. Either foreign direct investors also is there. Because now what will happen? The main thing is there, investment of money, the individual persons. When they are investing in money and they are staying somewhere because somebody has operating the company. So they follow the person, the investor has whatever the investment amount, whatever our capital, they're safe or not. Whether they're safe or not, they have doubt regarding the capital. In these situations, the company board appoint a special auditor. The auditor has appointed by the company behalf of Government of India as a legal procedure chartered accountant. A company form of organization is that ownership and management in the hands of different people. The ownership and management is the lie in the hands of different people. Therefore, auditing is a mandatory for companies to get their books of accounts audited. Auditor is a mandatory, but in case of sole proprietorship, auditor is a not mandatory. But auditing is not mandatory, even though it is not mandatory, but sole proprietorship is performing auditing duty and appointed. Okay, safe of further proceed. Is a requirement for auditing in a financial statement as a company. So, company has appointed an auditor. Auditor will verifying the all the records what they are maintained by the company. So he has to verify each and every aspect. And same thing will submit a reports to the concerned company based on the auditor reports. So the company has submitting audited reports those that report has submitted to each and every investors. Then the investor feel happy. Oh, whatever the transaction is verified. So auditor has verified. So everything is fine. Then based on that, the profit calculations, whatever that it is the believable, not only investors, private parties and bankers, government, is these reports is very much useful to those persons. And next case, next one is the audit of trust. Audit of trust. The trust created by the philanthropist for their benefit of some religious or charitable purpose, such as temples and educational institutions. Because this is a special purpose, religious development or educational development, either hospital, in hotel, whatever may be that. The anthropologist, so philosophist, they are donating money for the particular purpose. So that money we should utilizing somebody, and somebody also the responsible for the money. So because of that, we are going for audit. This is the audit of trust. They received money from different sources, even though it is a voluntary organization, it is not profit oriented organization, but it this institution, this trust also receiving money from different sources and distribute the same income among the beneficiaries as per the terms of trust deed. Trust agreement, deed mean agreement. Based on the trust agreement, we have to distribute equally and spend their expenditure in a based on their agreement, based on their deeds. So if accounts are audited, it helps both the trustee and beneficiaries. So it is the auditing is mandatory in case of trust. The auditor reports, based on the auditor reports, it helps the both the parties in case of trustees and beneficiary also. Audit of cooperative societies. Next one is a audit of cooperative society. Now, coming together, cooperative is a mutual, is a group of people forming a cooperative society. Next, credit cooperative society, a farmer cooperative society, women self-help group. These are the basic example I am going to discuss. They are contributing membership and joining a forming a particular cooperative society. A Mulkanuru cooperative society is there. Mulkanuru dairy cooperative society is there. These are the example. The member has contributed. So in this case also, audit is a mandate. In this case, audit is a mandatory. The separate ownership from the management. Separate ownership from ownership is different and management is different. Now, according to the business entity concept, business form is different and management is different and owner is different. When we are writing accounts, so we don't consider he's a owner. So owner is a difference and transaction is the different, business is the different. That's the business entity concept. This concept is applying to a cooperative society also. The capital of cooperative society is contributed by all the members, whereas the management of its affair is done only by some of members. Among the members, a few of them as an elected body, few of them elected body through voting for this purpose to maintain this cooperative society. This is the elected body, properly elected by the members, those contributed members, there's voting rights members. Therefore, it need independent financial audit. It is independent financial, not dependent financial. It is independently financial audit is mandatory. That is the one of the major things happened by the company. Okay, that is the one of the major thing. Next, audit of the government departments, the public utilities and government departments like electricity boards and water boards, railways, tourism, and also subject audit. So these are the things will happen by the audit. In public government department also appoint an independent auditor and verify all the records in a systematical manner, and they should submit the audited report to the government, concerned government, either state government and the central government. That is the a fundamental aspect in the in case of audit of government departments. Now, coming to the uh, next one, based on time and scope of audit procedures. Based on time and scope. So time period, based on the time period. Now continuous audit. Continuous audit. What is the meaning of audit? Generally, audit is a examination or inspection of different accounts book by the auditor at the time of ending the financial year. That is the auditing nature. But a continuous auditing means, so basically financial year begins 1st April and close 31st March. Between this 12 months period, the auditor has appointed by the end of the month and he is verifying and certifying the reports. But in case of continuous auditing, generally this type of auditing done by the huge organization, a big organizations, whole year, around a year or regular intervals, say weekly once, weekly twice, monthly once or monthly twice, quarterly once or quarterly twice, half yearly, because it's continuously. For example, they are going for weekly once. And every month, 4 times, the editor will visit and verify it and give a suggestion. Any errors is there, he verify it and they found the errors and then suggest good. Because this type of process will goes to happen is a continuous editing. It is a scope and time based. Because what are the advantages of the continuous editing mean? When continuous editing is there, basically big organization will appointed big organization going for continuous editing. When this continuous editing mechanism is happen, so simply they are going to reduce the errors and they minimize the errors, avoid the any mistakes. If the first week done any mistake, and the editor will verify those mistake and find out and given remedy, given suggestion, then next week that mistake will don't repeat. Maybe maximum is not repeat. Even though if repeating next month, so again the next month they are going to modify it, because the chance is there to update, to maintain accuracy, and there is a scope of fraud also reducing. If first week they are going to happen any fraud, the second week they are identified. In case of management, in case of owners, also they are fried it. Okay, if anything will done any mistakes, then there is a punishable. Then it can find within week they are going to punishable. So they feel like that. It helped to read immediately after the close of the accounting period. Then after completion of financial year, so final editor has submitting report is a very easily, because all the previous work has done by the continuous mechanism. It is a beautiful mechanism developed by the continuous editing. But some limitation also is there. So every time same editor will visiting, When editor will mingle with employees, and he's a very much close relationship build up. In the close relationship, so some of the editor will done any mistakes. Okay, based on the relationship, he or she doesn't give any direction because he is my friend na, chal da chhod do kai ko bother karna. So these are things will happen. These are so one of the problem. And when continuous editor will there, so already I verified first week report now. Not go for much about the first week, and after completion of all the weeks, I already verified. Why not? Why go for again? Because if any mistake will happen, so because of negligence, it will goes to error will happen, and it is very costly. By appointment of continuous editor, we have to pay a huge amount has to spend on the editor point of view. The whole year, and where the business is very large and there are numerous huge number of transaction to be checked where monthly in your final accounts are required. This is the basic continuous audit. Now coming to the final audit, a periodical or final audit, periodical audit and final audit check the books of accounts and the other related documents only at the end of the accounting period. Already we discussed in a continuous auditing is only end of the auditing. In the final case, we are going by the auditing reports, that is the final auditing report. Now coming to the next one, the distinction between continuous auditing and final auditing. The difference between these two, one by one, we are going to discuss as a basic point. First one, time period. First one is the continuous auditing. Second one is the um, final auditing. Continuous auditing is it throughout the year, either week basis, monthly basis. It is continuously evaluating, examination, or inspection by the auditor. But in final auditing, only by the end of the financial year, auditor will visit it and examine or inspection all the financial records. Those are maintained by the company. There is only one. Is a continuous process. Visit by the auditor. Frequently visiting in continuous auditing mechanism. But in final state, final is only once, yearly once they are visiting. Nature of business transaction. Business transaction very high, huge number of business transaction is there. Especially they are using continuous auditing. But that much of not use, they are going for final account. I mean, continuous auditing is a choice. It is not mandatory. It is a choice. Next, checking of transaction. In case of continuous auditing, checking of transaction is continuously checking. But in case of only once a year, we are going to verify it. Expensive. Continuous auditing has very expensive. We are going to pay more and more expenses to the auditor. But in case of final auditing, so once we are paying is enough. Next, interim accounts. Interim accounts mean we have to prepare. Every week we have to prepare. So it is a heavy work burden to our employees. But in case of that, final auditing is not need to interim reports. Detection of errors and fraud. But in case of continuous auditing, so we discussed it, minimizing the mistakes, errors, and minimizing the fraud. And in case of final auditing, so such thing will not happen. But nature of work is continuous nature, but it is a relationship with the stop of other. So already we discussed it. In continuous auditing, the relationship will building, and then anything will not disclosing seriously. But in case of one editor come only once a year, so he is not, friendship is not there. Whatever the things, whatever the mistake done by them, he automatically given, okay, this mistake done by you, this mistake done by him, so then he will clearly instruct. But in case of continuous auditing, already friendship is built up now. So because of that, they have not given clearance. Oh, this mistake will happen, but no problem. I will adjust it. This thing will happen in the continuous auditing. and quick submission of accounts. But in case of continuous auditing, the submission of final report is very easy. But in case of final, it's take time. It's 1 2 month, 1 2 days, or around 1 week. It goes to time. And declaration of dividend to the shareholders, investors, very speed we can declare because all things were done in continuous process. But in case of final auditing, it take time. It take time. And moral checking, the moral checking is there, but these are the one thing is happened by the next interim audit. An audit which is conducted in between the two annual audit for the interim purpose, it is called interim audit. It helps the declaration of interim dividends to the shareholders and to get the periodical data. That is one. Next, occasional audit. The auditor is not compulsory. This type of audit is not compulsory. In case of sole proprietorship, partnership, but wherever the need arises, for example, in partnership, new partner going to admit or any old partner going to retain, then they need audit because this is occasional audit we call. A balance sheet, it is the audit which starts with the verification of items appearing in the balance sheet. And partial audit, this client may be asked the auditor to audit only the payment side. Partial mean not fully. So the company client has going doubt. Okay, the payment side I have doubt because the auditor has appointed especially for verify. You have to appointed. I mean, auditor has appointed to verify only payment side transaction. That is a partial audit or anything a special case that's we call. And next thing, the client may ask the auditor to audit only the payment side of the cash book because he himself receive cash and check. So he himself as receiving cash. Mean receipt side, no problem. The doubt is there. Okay, somebody has paying money. Because of that reason, he has doubt whether payment has properly done or not. So based on that, he will clarify doubt based on the appointing the auditor. Oh, now coming to the next one, based on the objective of each type of audit. Independent financial audit, whether they balance sheet, profit and loss account, present a true and fair view of the financial positions and working results respectively of the enterprise under audit. It is conducted a professional, qualified and competent person who is the independent of the enterprises which here service for the purpose. Interim audit, to know the degree of compliance with the predetermined plan, policies or procedures. To ascertain the authenticity of accounting and other related information. Example, whether the resources of enterprises are being used efficiently and economically. Assets of the firm are properly safeguarded from the losses. Now coming to the next one. Cost auditing, which engaged in productions, manufacturing, processing, and mining activities. Under the section 209, section subsection 1, the central government is given a power to require such companies to give a particular relating to use of materials or labor or any others items of cost as may be prescribed. Tax auditor, the purpose of such auditor is to assess the tax of authority to make correct assessment of year. The government audit, the Controller and Auditor General of India is the authorized person to verify the records to conduct the audit of central or state government. Secretarial audit, the audit conduct by verify whether a company has compared with the provisions of Companies Act and other related law in terms as Secretariat Audit. Next, management audit. It means operations and use of human and physical facilities. The auditor examines the policies and the actions of management to ensure that there is no proper maximized utilization of available. Next, advantages of auditing. Next, we are going to discuss now. Thanking you. Thank you. This is the my brief discussion about the types of auditing. Again, we are going to see the slides one by one to overview of this one. Types of auditing. We are broadly classifying three types based on the ownership or organizational structure of enterprises, based on time or scope of audit, based on objective each type of audit, and this is the audit based on ownership, what call sole proprietorship, partnership, and a company. And the next thing is the auditor cooperative society and audit of government department also. Next, based on time and scope of audit procedure, continuous auditing, final audit, and difference between continuous audit and final audit, interim audit, occasional audit, balance sheet, and partial audit. Next, based on objectives of each type of audit, independent financial audit, internal audit, cost audit, tax audit, and government audit, and secretariat audit. These are the types of audit. And last one, management audit. Okay, finally, thank you. Thank you, one and all. Now,